Guten Morgen. Let me mark this as the beginning of our webinar. Wait, where's the marker? Where is the marker? Oh, I've got to be over here. Hang on. I got to go over there. Where's the marker? There's the marker. All right, good morning. It is, I don't know what day it is. I guess it's Wednesday. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. Apologize for the casual dress today. Like most currency traders, I suppose, I had one of those weird topsy-turvy days. You know, trading all morning, trading all afternoon, trading all early evening, trading before going to bed, waking up at, I think it was 1:30 in the morning, going back to sleep at 3 in the morning. And then up at 5:55, and then, oh my God. One of those days, I don't even know what date it is. Is it Wednesday? Hey, apparently it's Wednesday. Oh my goodness. Hey, well, thank you for being here. I appreciate you. I hope you're healthy. I hope you're wealthy. Let's get wise. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Yeah, apparently I like trading currencies. I especially like it when when I'm making money trading currencies. Anyway, so one of those things, man, hey, these are really interesting times, aren't they? I'll tell you, one of the trades that didn't work out for me was buying pound yen. I had it all set up. Technically, it was wonderful. And then I looked at, I was trading Asia. I had news coming in. Everything was good. RR cuts out of China. The stock market was going up. There was good reports of this thing and that thing, and everything is golden and everything is nice. And all the yen was weakening as it should in those situations. And we started to get some nice moves off of key price levels on all the Japanese yen pairs. So I bought several of them. One of his pound yen. Then, like I said, I woke up at 3 o'clock in the morning. Actually, 1:30 in the morning. I'm sitting there looking at my charts and everything's okay. And then what? The British government is thinking about shutting down some of their economy to protect themselves from Omicron and curbing travel restrictions 2.5 weeks after they were infected. Like, oh my God. And there goes that trade. Like, oh my God. But don't worry, the other trades are still profitable. Anyways, one of those things, you don't like it, man? Maybe this isn't the job for you. Okay? Because these things can happen. That's one of those situations where it's not technical, it's not fundamental, it's just an exogenous shock that blindsides you and takes your money. Anyway, so whatever. So luckily we're back on to fundamentals. And, for once in a long time, I'm actually day trading in the direction of my fundamental bias, and that's what makes me feel best. So anyways, if you feel any of these joys and pains, sunshine and rain, then, hey, we have congruency, you and I. We're traders. That's cool. It's just part of the job. So, hey, if you want to know more about technical analysis, ask questions. If you want to know more about fundamental analysis, ask questions. If you want to know more about trader psychology, like how do you handle this topsy-turvy world in a situation where one day we're trading inflation and next day we're trading interest rates next year, maybe. And then the next thing there's an Omicron thing, and then the next thing the Omicron thing is over. Then the next thing there's a government shutting something down, and you're like, I guess that's back on, and holy vey. Well, ask questions because we're all going through it. And the interesting thing is it's not just you, it's not just me, it's not just Forex. Stock traders, bond traders, futures traders, options traders. This fundamental versus technical versus, shocks is really taxing on everybody. And it's part of being in the business. So if you want to know how to handle that psychologically, ask questions. Yeah, the next thing it might be zombies, right? But, Ohio King. But, I don't know. It's just that's it. So you're a trader. I'm a trader. We're a trader, right? She's a trader too. So you're in the right place. You're right. You're in the right community. So thank you for being a subscriber. Thank you for the likes. Thank you for the awesome questions. And I would say half the questions that get asked in this chat get supported by other members of the community, not even me, because I can't answer that many questions so fast. So, you're in a really, really, really good place. If you're new, stay, man. Just stay. Just stay, relax, turn the brain off for a while, just listen, absorb, and then learn some of the ropes and then get involved. Right? Yeah, I saw that. That little glimpse behind me. I'm like, is that Raj? Yeah, so that's interesting. We just went through that yesterday. So now you're like, oh, isn't that interesting? Right? And also notice, Jim, with all these guys that we've watched so far, that key moment in time of Black Monday, or was it Black Friday? Anyways, Black whatever, when the 87 stock market crashed, everybody had that experience, right? So if you think about what I'm doing going through that series, and by the way, Jim's talking about something I'm doing at the day trading group, having them go through and look at the history of other famous traders. And that's where Raj came in. He had a relationship with Steve Cohen. And of course, that relationship took his SAC down, his hedge fund. But the idea, I want you to think about this. The psychology of what I'm doing here. If these, if November and early December has been psychologically challenging, I want you to kind of then look at the history of other traders that have traded for decades. And we're watching these documentaries of their history and what they do. And you'll find out like stuff like that happens, I wouldn't say all the time, but, occasionally, like things like this happen throughout history. But a time like this doesn't even really make the documentary. Yes, it's challenging. And yes, maybe it takes what should have been a good month and turns into like a meh month or disappointing month. But if you're going to be here for 20 years and at 20, 30, 40 years, like some of these guys have been traders, well, the documentary they make about you in the future won't even cover Omicron. It was just a blip in the matrix, a tough 6 weeks. Well, 6 weeks? And there's a pool of tears and blood and snot all around your desk because of this? This is what takes you down? Well, dude, there's some other bigger, badder surprises around the corner. So, like I said 5-6 weeks ago, how you handle this is going to be a test of who you are as a trader, where you have challenging times. Because remember, everybody can make money in a trend. It's not that easy. When you're between trends in that transitionary period, okay, that's when you define yourself as a trader. So anyways, that the psychology of watching these videos is to say these guys have gone on to make billions, but a key part of that is they've traded for 40 years, but they also rebounded from tough times, and tough times happen. Every single one of these guys had big drawdowns, okay? And then they systematically worked it all the way back. So anyways, the psychology of that is quite interesting. So, while you're here, let me know how I can help. I consider myself, I'm an expert. I've been doing this a while now. What am I, 18th year, something like that, as someone that's sharing my trading experience with the world live. I've been doing that for 18 years now. Isn't that amazing? Just my coming out date, if you will, right? Showing the world what the Wayne do in Forex. So really, I'm about 20 years of experience. I've been through this before, so this is your opportunity to ask. And I see myself not just as an expert, but really as a servant. I'm a humble servant that just happens to have this background, this experience, and I'm here to give you what you need. So make sure you ask, because I'm grateful and thankful for you being in my life. I'm super tired right now, but I sprinted out of bed because I'm here to serve, and I made a promise to you to be here. And you'll notice I've almost never, in that 18 years, almost never taken a day off. Almost never called in sick. Okay? So thank you for giving me that strength to get out of bed and do what needs to get done, regardless of any situation. Okay? So while we're at that, please visit Tradersway.com, open up a demo account. I recommend a variable spread. Try MT4, try MT5. I might be rolling over to MT5 anyways. Okay, I might be rolling over to MT5. I'm getting worried that one day I'm going to wake up and MT4 doesn't work anymore. I don't know why they even have two versions. So I might be rolling over to that. So, for those that are interested in my portfolio management group, we should probably talk about that so everybody's doing the same thing. Okay, so anyways, Tradersway.com. Look, they're fast. The fees are low. Okay, the spreads are huge. And I recommend them because they earned my loyalty and respect, not through words, not through promotions, not some ad I saw on YouTube or on Google, but through their behavior, through a real stress point in the Forex industry, one where every professional trader remembers the moment. And in that moment of unbelievable, undue stress from this crazy exogenous shock that put brokers out of business, Tradersway was standing there firm and strong and healthy. And holy crap, other brokers went out of business. And that moment in time, Tradersway earned my loyalty and respect. Give them an opportunity to do the same for you. That's all. Do your own due diligence. Try them out. That's what worked for me. Boom. And I think, I'm well into my 7th year now working with them, with a relationship. Okay? Isn't that, like, dude, seriously. Okay? Jim says they are planning on sunsetting. Of course they are, but no date. Right, so great. It's not very helpful. So maybe we should talk about that. It's Wednesday, right? So maybe in the day trading group today, we'll talk about that, because to be a portfolio manager, you have to be a day trader. Okay? 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 Yeah, that's all right, Richard. The thing is, this is a long-term game. This is long-term. Right? If you became consistently profitable within 5 years, you're probably unique. Take your time, man. Don't speed it up. The choice is yours. Don't be late. I don't know why that reminded me of Nirvana, but yeah, take your time. Hurry up. There's a friend. There's a trend. As I know you would be. Anyways, right? Yeah, you like that? I'm close to... anyways, whatever. I'm glad you're using this. So, vodka, are you using it? Is it really helping? Right? I have to pay another like $1,500 in licensing fees to that. So, I hope you're using it because I'm paying for it. Yeah, I know what you're talking about. Yeah. What's broken? Dude, if it's broken, I want to stop paying for it. Yeah. Oh, you're using the templates, of course. Great. I'm redesigning everything right now as we speak. Okay. All right, so let's get on with it. Yo. What do you want to cover first? Let me know in the chat. What do you want me to cover first? Matrix is right. Like you've been doing Forex for 5 years, now just getting consistent. Yeah, right. What is that, Jim, you've been using? What have you been using? The simulator? Well, I need to know if it's not working. I want to stop paying for it. It's not cheap. Okay. Oh, MT5. Yeah. Okay. Yeah. Forex tester, yeah. I used to have a relationship with him a long time ago, Lucas. But now that's what we're doing. Fxbootcamp Live has its own simulator, so let's try to figure that out. Mr. Shine says got into Forex because a guru told me he turned $5 into 10 million. Oh yeah, that's good. Yeah. Do the pivots work? Yes, it's in MetaTrader. Yes, I had it all redesigned. Right, thanks to Kishore. Although we need to rename the files, but yes. Okay, so what do we have? Let's get on with it. Did you guys answer? I only got 2 people answer. Really? Bitcoin and gold. So if I do those 2 things, I can have the rest of the morning off. All right. Great. All right, that's easy. Gold and Bitcoin go home. Wait, I am home. Okay. Hang on, I got to do something. Choice is yours, don't be late. Hang on, I gotta close the position. Hang on. I've been so busy, I haven't even been watching my cash position. Hang on. Sell 2.1 Bitcoin. Oh well. Been too busy to even watch it. All right, cool. I'm out. All right, I'll leave the cash there. All right, sorry about that. It's too bad. I haven't been able to follow that. Technically, it's still very, very bearish. So, all right, so gold. Somebody asked about gold. I'm so fascinated why so many people are so interested in gold, yet it's just not very, it shouldn't be that interesting, right? It just shouldn't be that interesting. It hasn't done anything all year. So why is gold one of the most, followed assets? It's just crazy. But so we'll look here. And if you go back 5 weeks, right? Wait, no, 5 days. 1, 2, 3. So if we go back a week, the price is the same and it's come down. Now, it is less bearish than it was before, okay? But it's not bullish per se. There is an inverse head and shoulders. So, like, it was much more interesting. Where do I get my... Uh-oh. Hang on. My drawing tool doesn't work, so I got to close it here. Then I got to close it in the taskbar. Task manager, and Epic. I got to close it there. Okay, and now I got to open it again. Hang on. Vodka, how, on the level one exam on the pips. How many pips did you make on the trading test? There we go. Good, it worked. Okay. This is that's sort of the best, if you were a bull, the best sort of scenario. And now you're probably going to try to catch something like this. So you might want to use like a standard deviation tool. Yeah, the Exile says if gold's popular, they're trading it for a different reason. Yeah. Well, I think in some parts of the world, people just literally physically have gold, and so they're worried about it. But as an asset class that we trade, it's got to be the worst performing. Yeah, vodka. How many pips did you get? 5,000, 10,000, 15,000? Okay. Right. Right. So what did you get? You got 19,650. Oh, good job. What do you think, guys? Vodka got 20,000 pips in a trading exam done on the MT4 simulator. But it was part of Trade the way Fxbootcamp has taught you to trade. Open this chart, run the simulator, and trade it. 20,000 pips. Yeah, it's not bad, huh? People won't believe you, vodka. Yeah, they won't believe you, of course. But that's normal, like everybody, right? Everybody made big pips like that because it's a requirement. So now you know, yo. Very good. So anyways, gold, by and large, is not a great performer. And then when you add to the like lack of overall performance for the entire year, when you look at sort of the volatility inside of that, what it does is it increases a level of risk. And then when you do a risk-adjusted return, it makes it an even worse investment opportunity. It's not just the return, but like when you add volatility into the asset you're trading, okay, then it makes it very difficult to understand in the future what will the investment be worth. Will it go up or down? Will you be up 10%, down 10%, or break even at the end of the year? Well, if it matters, like, well, if you measure it this week, you'll be profitable, but if you wait 2 weeks after, you won't be profitable, then it's really hard to like plan and prepare. Right? You understand? Like, it just makes it even worse. So once again, I go out here and I say, if we look at what happened in, January is about, where's January? Oops. January is about, so there's where we started the year. Here's the low of the year. Here's the high of the year. Okay, I'm trying to make these straight across, by the way. Okay. And this is where we are now. This is where we started. In contrast, buying a broad index like the S&P 500, you're buying basically every mature stock in the United States of America. You couldn't get more broad, more diversified, which means the more diversification you have, the less likely you're going to have big alpha. In fact, you have no alpha. This becomes pure beta. So just buying the beta, like the most basic thing you could possibly do as an investor, is buy the S&P 500 index. And it would cost you 0.00125%. where that you're holding gold for a day costs more than that. I'm talking for the year. And then the result right now is we're back to an all-time high at 27%. Meanwhile, everyone's like, gold, 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 gold. Well, we started here. We're here now. Nothing happened, bro, except high volatility. Oh, my God. So now you take a 0% return, high carrying costs, right? And high vol, and you get a loser investment. And I know since so many people want to talk about it, I just kicked a lot of people in the shin, some people in the teeth. And they're like, Wayne, you an a-hole. So I'm just trying to show reality. This has high carrying costs, high volatility, and 0% return. You could have just bought the S&P 500 and been way up. Or you could have just bought real estate, been way up. Okay? But, yeah, if you're over here, you're probably doing something. Yeah. Right? Yeah. Yeah. Well, it's a wake up. It's just like, again, I have to be larger in life to get some of these thoughts across. Otherwise, you won't remember them. People traded on the 5-minute. Yeah, well, good luck with that. So one of the things we've noticed in the series of professional hedge fund managers that went from zero to billionaires is that they don't make small trades. And I want you to think about that. If you're trading small all the time, like you're not, and I don't mean like you might do big lot sizes. That's just even dumber. But this idea that you're in it for a short amount of time, regardless of your lot size, but just the short amount of time, what you'll find is these self-made billionaires don't trade that way. When they're not right, you hear things like, this trader is dispassionate about their trades, and if it's not working out, they take their losses quickly. That's a common theme. Every single one of them are like that. But when they're right, they build positions, big positions, right? When they're right, they're very, very right. Well, think about it. What do we just learn about these self-made billionaires? Okay, some of them made money in the stock market. Some people made their money in the commodity market. Some traders made their money in options. Some traders were making money on bonds. Everybody was trading the Russian default and all that kind of stuff. So bonds, stocks, options, commodities. The theme is their losses were small and their winners were big. So if you take a gold trade to the downside and you make $25 on the scale of history, you're invisible. It doesn't even matter. So the point is then you don't make a lot of money. So now you got to increase your lot size. That's a fool's errand. It's just a fool's errand. Nobody has become a billionaire that way. None. Nobody. When you're right, you must be very, very right. So if you take $20 out of gold, dude, you're not very, very right. You're like, well, I put a big lot size. Well, that's gambling. That's dumb. It's just dumb. So be careful with which guru you listen to. Look at history. How many people have become wildly successful only taking short-term trades? None. But what do we know about a universal truth? Don't think about me. I'm not talking about me. I'm talking about like the universal truth of trading. You must let your winners run. And of course, if you hit a trend and you got running winners, you add more and then you add more and they're still running. And the cool thing is, every time you enter new trades, you're only risking that 33 pips per trade, let's say. You might have 10 trades open. They're all profitable. You add an 11th one. How much risk do you have? 33 pips. You're never over leveraged. Okay? Okay, we were listening to David Tepper the other day, and CNBC asked him, well, how much lever are you using? How much leverage are you using? And he laughed. He's like, none. None. He's like, none. What do I need leverage for? My trades are so freaking good, I don't need leverage to make up for the fact my trades are mediocre. Think about it. He's worth $14.5 billion. When he started, right, he worked in the Treasury Department for a steel company in some horrible little like steel town in the 70s. Where there was probably 80% unemployment and there were strikes going on and the world was horrible and he grew up dirt poor. And he's like, I got $14.5 billion now. Like, think about that guy. He's crazy, right? So don't listen to me. Be a student of history. Understand how the markets behave. Understand the role of the central government and the central bank in managing the economy and creating jobs and creating wealth. Understand these forces of inflation and disinflation, but also understand the universal truths of your business. So again, to those that are, I'm not just picking on gold here, but I'm like if you are, like Brinsley said, you're stuck on a 5-minute chart trying to make $20 on gold, you're not looking at it the right way. You're asking the wrong questions. Now, I've known some of you for many years, and some of you are very good short-term traders. I'm not saying it's a bad scenario. In fact, it's a good skill to have. So I'm not shaming anybody here. I have nothing but love and respect for you because I know some of you are very good at short-term. I'm pretty good too. The issue is it can't be the only thing, and I only ask that you open up your heart and your mind to the idea that you can add to your repertoire of trading capabilities, and I'm backing it up with history and what we consider a universal truth of trading success. You have to let your winners run. Sometimes your trades are worth more than $20 on gold. Maybe it's worth 200 every once in a while. Right? Now, Theta says, but Wayne, the market's not the same as 10 years ago. I agree. Not the same market moves, but still market, lots of chances. Yes and no. Obviously, it's not the same, nor will it always be the same. It will be different in the long run. But if you study... I don't know. I guess it wouldn't be finance. If you've ever taken a markets class at a university, or maybe like behavioral finance, if you take a class in behavioral finance, for sure, they're going to cover stuff like efficient market theory. You guys know this one? It was covered a little bit in the David Cohn documentary. But efficient market theory is that all the market participants are super smart because we have awesome computers, we have awesome databases, we have instant access to real-time news globally. We all know everything at the same time. Like me being long pound yen last night and everything was good, and then suddenly some news came out that the UK is thinking about additional restrictions because of Omicron, and I got crushed on my pound yen, and it just took minutes. Yeah, okay, that's efficient market theory, that you cannot beat the market. It's statistically impossible. Every piece of news is priced in perfectly in real time. Well, I guess then there's nothing for us to do. I don't believe it's true, by the way. I believe most of the time, most data is priced in. Okay? So I don't believe in the strong form of efficient market theory. Okay? So there's strong form and weak form. On the weak form side, I would tweak that even more and say most of the time the markets are quite reasonable. Like they do what you would expect them to do, knowing the information we know. So like, I'll tell you, this may sound arrogant, and it probably is arrogant, but the way I remember 2021 is I had almost to the week. This week, everything would go down. This week, everything's going to go up. This week, the market's going to go down, right? For 2, 3, 4, 5 weeks. And then it's going to turn around and it's going to go up. And then I'm going to get out. And then it's going to do this. And then it's going to come back. And then I'm going to get back in. And then it's going to go up. And then it's going to come down. And then it's going to go up. Like, dude, I think by and large, I freaking destroyed 2021 as far as completely predicting the ups and down moves of the markets, literally down these few weeks and then up these few weeks, and then you should take your profit, and then down here, and then you should get out, and then it's going to turn around. Be ready for it. Like, just amazing accuracy, in my humble opinion. Cool. So how can one do that? Well, then the markets must be efficient. Everybody kind of understands the basics, and everybody's kind of doing the same thing, and everybody understands the flow. Now, amateurs won't, but I'm talking about market movers, right? And so everyone was kind of doing it, right? And then Johnny's right. And then November showed up. The market became inefficient. Or I was just simply wrong, and I'm open-minded to that. But I would argue that I expected November to start down, but then rally up. Well, and of course, it never did that. So then I had to rely on my skill, the art of losing money. I think I lost money beautifully in November. Okay? But the thing is, then the market wasn't efficient. And that's my thesis. Okay? So going back to Theta's like, well, the markets are different now. So therefore, it's not as easy. Well, here's a different way of looking at it. When I first started trading Forex, it was crazy wild. Massive spreads, huge moves, but then you could see wildly risky. Okay? Where you could lose on pound yen 300 pips in an hour. Okay? I one time was trading USD yen, one of the slowest movers. I remember it broke 115 because I made a prediction. If we broke 115, there would be a big move. Okay? And dude, I'm telling you, this is 2008, 2009. I don't know, a while ago, right? Actually, it was even before that. This might have been 2005 or 2006. Okay, anyways. I had made this prediction. I did some research that the average CFO at a Japanese company had created their business plans, their financial plans based on an average price of 115 on the USD yen. So anyway, I'm like, when we break that, this is going to fall hard because, there's going to be positions in place and all this kind of stuff, right? Hedges and all these things. Great. So I made that prediction. In about 5 minutes, we had dropped 300 pips more. Now, we started this move at probably 114, came down to 116, came down to 115, and then all of a sudden, like literally 5 minutes later, we're at like 112 or something. And you're like, Theta's like, hey man, in those days it was easy making money. Oh, really? Do you understand? If you're on the wrong side of that trade, you're like, oh, well, everyone's planned 115, so I'll buy a bounce here. So you throw down a trade, and 5 minutes later, you're negative 300. Well, if it's easier to make money, it's easier to lose money. Now, here's the problem. I see where we are, and I'm like, oh, my God. And I remember boot campers are cheering, right? Oh, yeah. So I hit out to take profit. And it took another 5 minutes to get out of the position. We call that slippage. And it moved up and down hundreds of pips for that 5 minutes. So I was up 300, or actually, because I shorted high. So, 1 minute I'm up 400 pips profit. 1 minute later, I'm up 300 pips profit. 1 minute later, I'm back to 400 pips profit. 1 minute later, 300 pips profit. 1 minute later, only 200 pips profit. And then but I've already clicked out. Do you understand? I've already said out, 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 out. But there was no one on the other side of the trade. There was no one to take me out. So I'll argue, yes, the moves are bigger. Yes, the moves were faster, average daily ranges, but I was paying 15 pips spread on the pound yen. You're like, 15 pips? I can't afford 2 pips, right? People complain about 2 and 3 pips, right? So I'm like, holy crap, holy crap, holy crap. That's the old days. So now imagine your risk level back then was exponentially higher. So now I want you to look backwards and say, well, what do we have now? A boring, slow, easily predictable market that trades logically. Well, you know what? I'll take that. I'll take that. And then if I do get blindsided, well, I'll pick myself up, dust off the dirt, and say, oh, what was that? Okay? And change my tactics for a while until we get back to normality. Snap back to reality. Oh, there goes gravity. Oh, dope, babbity, dope, be dope, babbity. I don't know. It's a Eminem song. So anyways, yeah. So there we go. Speech over. Let me get down off the podium. In sooth, I know not why I am so sad, right? Anyways, cool. So there we go. There's gold, and Bitcoin came down, so I got out of that. All right. What should we do? Let's go back to the indices. Let's just start over. Data says that's why people use high leverage to compensate for delayed. No, it's to break. Sorry, not to break. It's to compensate for mediocrity, in my opinion. Okay? So if your trades only produce 20, 30 pips, dude, yeah, you're going to have to leverage up if you're going to make any money. Okay, but you get no power of compounding. You get no power of lower risk per trade. You get no income from your investments. It's small. That's all. And I'm like, well, get really good at the small. I think people that are really good trading short-term charts and predicting ups and down moves, which we call price action, I think if you get really, really good at that, I can teach you to be an amazing trader. So again, I'm not slamming it as sort of a technique. I would like to build upon that wonderful foundation. Okay? So I wrote a magazine article years ago about how to turn a good trader into a great trader. And it'd be one of those things like, if you're really good at just nailing tops and bottoms and just understanding the price action that way, oh my God, we can get good together. Okay? But it can't just be your thing. If you can't predict the future, then you're going to be stuck on a hard, a part-time hourly job. Okay. Okay. Cool. All right, cool. So euro up, pound came off because of that news. Aussie up. So I sold yen hardcore last night, and that's what I was looking at 7 at night, 8 o'clock at night, 9 o'clock at night, 10 o'clock at night, 1:30 in the morning, 2:30 in the morning. I'm still all on this, and saw this devastation, and yeah, whatever. Dollar was already weak. there's been some strength, and then boom, weak again. So all of this kind of upward move was all based on this pound of potentially more restrictions coming into the UK, and that's just bad for business. So that was a major blip in the matrix. Let me just check my positions. Oh my God, that's so fucking amazing. Anyways, I felt right. God, this is a good day. This is a good day. Holy smokes. So anyways, Euro Yen's one of them I'm on, and it's doing great. So let's start with dollar pairs, okay? Let's start with dollar pairs because they were okay. They were set up okay, but maybe not great yet. So we got to look at these technically. But fundamentally, many of us had made a turn on Monday to be bullish again. And then one of the questions I posed to the day trading group last night is, you're thinking up, but why? Well, you might say fundies say up. Yeah, it's true. You might say seasonality says up. Okay. Then you say, well, Bank of England is going to raise interest rates. Huh? Right? They were supposed to do it last month, and then they didn't. And now it's expected to happen this month, so people are buying the monthly M2. But what just occurred? Government shutdown of the economy? The Bank of England can't raise interest rates when the economy is going to be shut down? Wah, wah, wah. So you want this to go up? Nobody cares. Hey, man, don't worry about it. I want it to go up too. It's over. Ish kaput. Or you're going to buy that and, dude, whatever, man. Do what you got to do, but try to be smart about it, right? So anyways, roll reversal here. Okay, dynamic resistance here. Okay, and you can see bears just, look, a bear did what a bear would do. They sold off the 21 in a day trading zone and got freaking lucky. But at least if you're going to get lucky, you're most likely to get lucky trading in the direction of the technical bias. You're very unlikely, you're almost never lucky trading against the actual trend. But you might have lots of logical reasons why. It doesn't matter. Don't be logical. Just do. If you think this is logically up, then you can have the patience and discipline to wait. That's all I've been saying. So anyways, a bear sold here, and they were thinking here. Do you understand that's what was set yesterday? Based on yesterday's high, yesterday's low, and yesterday's close. Let's do it again. Based on yesterday's high, yesterday's low, and yesterday's close, our statistical analysis said down. The second thing it said is take profit. Oh my God. Becky, look at that profit. Look at the accuracy. That's my Jerry Seinfeld, by the way. What's the deal with pivot points? Okay. Oh my God. Oh my God. Huh? Oh my God. Okay. Well, what I say, Brinsley, is it'll fall forever until it reverses. Okay. So anyways, interesting, right? Very, very interesting. My take, having worked every single day with the day trading group through all of this, is lots of people learned how to profit on that uptrend. I did a lot of like hardcore training in the day trading group. Like, how do you aggressively buy a market that's already overbought and out of position? How do you do it despite that? Because you have such a trend, you gotta be aggressive to push in. It might not come back because nobody's taking profit and nobody's selling it. So, like, how do you be overly aggressive? And we crushed it. And what an amazing month. But there were so many challenges. How do you take profit? And then how do you get back in? How do you build a position? How do you get into a position when you're out of position? And like, oh my God. And then the pullback. How do you survive the pullback? How do you handle the risk? How do you do this? How do you grow more conservative? How do you handle this other situation? How do you handle wrong? Oh my God, the fundamentals just changed. Now what do we do? Do you short-term short and ignore your long-term long? And which moving averages and what time frames do you watch to manage your risk? And how do you do this? And wow, I think probably the last 8 to 10 weeks have provided significantly more learning experiences than I would have even hoped to have provided, because I wish it wasn't risk management and trader psychology that I'd be teaching so much of lately. I still wish we would be in a trend, but you know what? This is better, I think. If as far as real world experience that you can carry 5-10 years in front. So just absolutely amazing. Okay, just amazing. All right, so now looking over here, let's get to something that has different fundamentals now. Okay, I actually need to update this. It's still on the old setup. Change it to bullish mode, obviously, and boom. All right, cool. So we have a bottom down here. Okay. Morning star formation, which is a reversal. Okay. Asia open. London open. And daily target. Wow. One thing I noticed, and we'll see this on the yens, there were some fantastic setups last night. Just beautiful if you were a day trader. And in particular, if you're a day trader that wanted to swing and carry. Or swing in position, really, because there's not really a carry. But the patient and disciplined were rewarded. Now, I like to critique myself every day. And I've been telling myself the last in particular 2 weeks, I've been very patient and disciplined on high time frames, but I could have been more patient and disciplined on lower time frames. So I'm trying to figure out sort of like my what I want to work on in 2022, because I'm always trying to improve, and I'm coming up with some ideas of things that I want to focus more on, and maybe that's some of it. Like I don't know if that's all of what I'm going to do, but that might be something where I could be even more patient and disciplined, and I think more often than not, it produces better results than what I have been doing, which is good. So I'm very critical of myself, and I have lots of room for improvement, and I'm going to actively work on it in 2022. So here's what I'm thinking on this interesting move here. So we're up, and this is a take profit zone. And so really you want to look for a pullback like this for tomorrow. So I'm going to look at it now that the stock market is open, so at 9:30. And then I'm going to look at it at 11:30. Then I'm going to look at it 2:30. Then I'm going to look at it, then I have my 4 o'clock day trading group, so I'm going to look at it at 4 p.m. Then I'm going to look at it probably around 7 p.m. around the early Asia open, and then probably 8, and then probably 9:30. Okay? And hopefully I don't get up at 8 o'clock or 1:30 in the morning like it did today and trade in the middle of the night. I really dislike it because I get bitchy, right? So there's a lot to this because this isn't anchored yet. So what I don't know is if we're going to go higher today, which then would move this buy zone. So one of the things you might want to do is kind of keep this in mind, but then look at the roll reversal, look at the EMA, okay? Be cognizant of the out, but also remember, think of the people that bought it here and then bought it here, okay? Don't look at the day trade. Look at the monthly M2. Look at the weekly support. Weekly support says R1. The next pivot is central pivot point. Is it possible? Is it possible? Like, is it likely that we're going to go here sometime soon? It's a weekly target. Now you're like, isn't the weekly target here? Nope, you're not reading the chart right. You need to go through the course again. It's not what it says. It says 1420. But whoever bought back in here is actually looking at it different. They're going to be in it long. So they're going for 117. So they're going for 500 pips. Let me mark this down. They're thinking 112.5 to 117. Okay. The smaller time frame is thinking here to here. Which one's right? One, both, or neither? Oops. Let's do a quiz here. Let's ask people. Let's do a poll. Let me do a poll. Hang on. Which of these do you think is correct? Okay. So if you buy it at 112.5, going for 113.5, 100 pips up and reverse. 500. Well, I guess it's 400. Let's say 400. 400 pips up and reverse. And by reverse, I'll even put stop. Reverse or stop. And or stop. Okay? Okay? Neither, which leaves it open to all kinds of things. Neither, but we'll just say down. Neither or down. Okay, ready? Matrix says, have I had any, year-long positions in 2021? No, not that I recall. No. Last year, yes. The year before, yes. The year before, yes. This year, no. But I'm also tweaking what I'm doing a little bit. This is I'm trading modestly different, right? But no. The answer is no. Typically what it is, I think my longest positions are like a month or two. Probably even a month. Take profit, get back in. Trade for a month, take profit. So I'm thinking back. I think I bought a bunch of stuff at the bottom of March and took profit in June. So that's 2 months maybe? Does anybody remember? I think that's roughly right. Let's say all of April, all of May. Okay, let's see how many people. Yeah, we got more than 30, so statistically relevant. 10, 9, 8, 7, 6, 6, 6, 6, 5, 5, 5, 5, 4, 4, 4, 3, 2, 3, 2, 2, 2, 1, 1, 1. Ba-down. Okay, most people think only 100 pips and then down. Gotcha. 1/3 says all the way. And some people, 15%, say neither. Cool. So that's the short term versus the long term. And that's probably the reasonably representative. You know, if I asked 1 million traders to respond, they would probably say something like that. Okay? So it really has to do with your outlook on how long you want to hold this trade. That's what it comes down to. If you're thinking the end of December, then that's what you're doing. If you're taking this week by week, then this is what you're doing. So very interesting. So some people are like, there's 15% that say down or sideways. Okay. Some of which would be like this whole move up would then lead to a break, then to an up and a down. So that's some of you guys. Bear in mind, we've already had that set up, so the turn will have to happen soon. Okay, so that's what some people are saying. So even the sideways people would probably have bought it and taken it to the top. But sort of those that are more inclined for swing trading and position trading would say, look, this is the projected low for December. Okay, oops. This is what a position trader sees. Okay? Let's just draw it like this, and I'll make it fat. Okay? Okay, this zone here. Okay? A position trader sees that and says, that is my projected low for the month of December, assuming that they're a bull. So a bigger trader like that, I don't think would take profit at 114. They'd buy it at 1250, but I think they'd move their stop. And the target, like what the chart says, by the way, all it says, if you're a bull and that's your buy zone, and again, I'm looking out on monthly, your projection for the month, okay? So again, let me write this out. If you, a little thicker here. If you're a bull, okay, then you would do this. You'd walk in and say, I want to buy around 112.50. Okay, very easy setup. And your expected return based on your statistical calculations of market conditions. You will buy around 112.50. And by the way, and we can put this as a side note, plus add on dips. It's just the strategy part. This is the strategy. Okay? And the target in which you will start to take profit is 117. Okay? So filtered through the lens of a bull on December 1st. That would be the strategy. This is what I mean about strategic and tactical Forex trading. We don't know if any of it's true. It's just a strategy. Okay? So many traders could have bought this dip. That's a bit scary. That's the Johnny's rocket crashing to earth. Here's a second attempt. Okay? And so even if you're a bear or you're neutral, I want you to listen to me. Even if you're a bear or neutral, you're like, Wayne, that's not going to happen. You still have to understand how the bulls are going to tactically act, tactically behave in the coming days if there's any follow through on this. Okay? Bulls are going to want to buy in this zone here. A bull will want to buy around 113. They might fib this to this to this. They might fib this to this to this. They might look at it as an inverse head and shoulders. But whatever. You have to understand the other side of this equation is they're a bull. Some of them are thinking 114. Some of them are thinking 117. What do they do with a higher high? A bull will, okay, it's certain. We don't know if there are bulls, but a bull will buy a higher low. Where, pray tell, is the higher low? That's it. That's today's job. Where will the higher low be? EMA? Right? Price action? Roll reversal? Pattern? Oscillator? Other? News? Market open? All that new money coming in, like Pfizer did something smart today. Did you hear that? There was rumors yesterday that Pfizer found in the laboratory that their vaccines were not very effective against Omicron. Did you guys hear that yesterday? So what did the company say today? Oh, it's so wonderful. From a bullshit business point of view, how did the company spin it? How did they spin it? Did you hear them spin it today, Jim? So yesterday, again, the rumor was coming out like, oh my God, Pfizer's not that effective. So they came out today and they're like, oh, we studied it in a laboratory. No, well, yesterday the rumor was they were not effective. Here's what they then spun. So maybe you heard this part, Jim. They spun it today. They said, oh, yeah, it might not be that good with one vaccine shot, and it might not be that good with 2 vaccine shots, but oh, it's really good if you have the 2 vaccine shots and the booster. Oy vey, oh my God. They're like, dude, you have to get 3 shots now. You have to. Isn't that funny? Oh, but good money, right? Oh, good money. Such good money. Oh my God. The funny thing is, I just don't believe it. I just don't believe it at all. I think it's just another $100 billion a year. Oh my God. Just out of the United States. It's just, oh, it's so wonderful. Because, they should have just come out and said, you know what? It's pretty good if you're fully vaccinated, but it's not perfect. That's what they were supposed to say it, right? But then they're like, oh, but if you get the 3rd shot, you'll live. Uh-huh. Matrix is startup money. It's funny you wrote it that way. You guys remember my license plate back when I was a venture capitalist? Probably have it right there. I see one of my license plates. Oh yeah, it's right there. I just, the way you wrote it, Matrix. Yeah, let me show you. It's kind of cool. Here's my license plate back when I was a VC. Let me get this. Oh. How cool is that, huh? Yeah. Then I quit my job and it's not fake. It's not fake. That's a real license plate. It was on the front of my car. That's why there's no stickers. But that's real. It's not fake. Then I moved to Georgia. Okay. And back in 2014 is when I bought my AMG 55 CLK Cabriolet and got that one. Yeah. Yeah. Now mine says disobey. Disobey. So anyways, so one could handle all of this like with this strategy like that. I'm not saying that's the right strategy, but that's what you could do. Okay? And then you pull out your auto stop and you're like 33, and you throw that down, got your smiley face, and you're golden. It's one way of handling it. Okay? You meant straight up, but I thought startup. Yeah. But you get it, right? GR8, great. And the other one was Star Tup. Anyways, let's. Oh, you didn't even see it. I got to go. Where? Here. So what I just did, I guess you didn't see this. Sorry. I threw down. Well, let me just do it again. Okay. One way you can handle this if you want. Okay. I got my auto stop here. Let me just redo the auto stop just so you can see it. Do you want to cancel it? Yes. Okay. Now we have to bring it back. So I have a 33 pip stop if I get put in the market and a 333 pip take profit if I get put into the market. So now I need a working order, not a market order. And I can do something like this. So now if it comes down touches, it'll put me in. So the working order gets turned into a market order, which gets turned into a position, which then drops a 33 pip stop loss above the current buy zone, and then a 333, probably around here, up here. And of course I can adjust. Okay. That's one way you can do this. And that's typically how I trade Asia. Hey, my doors are going to be delivered tomorrow, apparently. Defined as a taker, what do you mean? Okay. Aussie's red hot, riding the 5. Kiwi's red hot, riding the 5. I want to do a couple of yens and then I want to get out of here. Oh my God! Yeah, that's my euro. This is what I bought yesterday. Here's how I traded it. You want to see how I traded euro yen last night? Let me show you. Okay. You thought as a mark, enter the market, it has no limit orders, is it profit? No. And when I enter, even if I enter at market, like if I just buy this is why I use my, I always have this auto stop running. And you, of course you can change it. So what I've been doing lately is I've been doing this on a lot of my trades, which are more like swing trades versus day trades. It's a little too big to be a day trade. And it gets me in and I get started. So now I have this little smiley face. I'll always have that smiley face there. So if I click buy, it'll drop the stop and the limit automatically. Pachow, pachow, done. I never have to think about risk reward and all that. Okay. Okay. So a limit and a stop limit, right? What they are working orders. They're sitting around waiting for price to touch the execution price, if you want to call it a strike price of those orders. Okay? When you hit market, it just puts you in at the best available price the market can bear at that moment. Okay? So, yeah, I click this buy button a lot. I love the buy button. But like in Asia, very often I can't. Like I just can't be there. Okay? So I bought here in Asia. Okay? This is the British news. So this is me watching the market at 1:30 to 2:30 a.m. That's what I was doing at 2:30 in the morning. I was watching this move against me because I had already entered way down here. Okay? Not on the 30-minute though. You'll have to see kind of what I was doing here. But anyways, you'll see that I had step up, right? You want to look at it that way? Up, up, up. So I bought this little dip here. Okay. Now I have a real big choice now. I have 100 pips profit for the day. Pissy little day trade. Okay. Just a pissy little day trade. So, okay, I have to make that determination. If you're a swing trader, this M2, okay, predicts 128.85. You notice we've hit it and stopped? This tells me that, okay, you ready for an advertisement? I think you should join FX Bootcamp and learn how to swing trade and day trade. Before you do that, though, inside of the training courses, I think you should start with the basic training, basic training fundamentals, right? And then I think you should take the price action. Both of which is taught by David Pegler, if you remember David Pegler. Take those, and then take my swing trading course, then take my day trading course, at the very least, because, okay, you need to understand all of this. Okay, cool. Okay. And this is like the range trading. So some of you might be range trading. What I'm hoping is if you're a range trader, I know Meta crushed it yesterday on the pound yen up and down. I'm hoping range traders get sucked into this narrative. But I don't know. Okay. 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 Cool. Gee whiz, look at that. I think I got taken out of this trade above this, so I'm so glad I have good risk management. Oh my God. That was an epic loss in such a good way. It's so sad that I was profitable on this trade, and then I could have lost I could have lost 150 pips on that if I was sloppy. So suddenly I feel really good, really good. All right. Take a look at another one. I am long Aussie yen. So let me switch the chart around. This was sort of an OOP one. Wait, that's not it. I am long on that, but that's not the one I thought it was. Which one? Was it Kiwi? Was it CAD? No, CAD was too hot. CAD I couldn't. It was in a counter trend situation. So anyways, anyone that's taking the group, right? Like I'm sitting here on Tuesday night and I want to buy it, but I can't because of a counter trend threat, right? So I passed on that even though it was smoking red hot. I just couldn't do it. So maybe it was this one. Reverse. Let's go. Daily confluence. Yeah, there it is. Check it out. Right? Up, 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 down, down, buy. Up, 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 down, down, buy. Lovely to you, mum. Okay. That was my Asia. That was my Asia. Yeah, baby. So now the question is, how far? How long? Take on me, take me on. I don't know. Okay. That would be nice, wouldn't it? 77 to 82. I don't know, man. Yeah, I don't know, man. I don't know, but we'll see. We'll see, but like I said at the beginning, it seems like in forever that I was able to day trade into my fundamental bias and not against it while I try to survive an uncertain market. So I don't know if it'll last. I really don't. I mean, like, dude, you can wake up in the middle of the night and some guy in England said something stupid and wipes you out. So I have to trade that way, like that risk exists because it does exist. So be mindful and be smart and do what you can. Make good decisions. Hang on a second. Oh. So another day as a currency trader. It's been good. So I'll be watching market over and over and over all day, all afternoon, all evening, all night. And it's only Wednesday and it feels like Saturday. So anyways, lots to do. We're in the middle. Remember, we got oil inventories and all that kind of stuff. Big event coming up. You know, we got some central banks talking. We got oil inventories today. We got rig count on Friday. We got CPI on Friday. We got Fed meeting next week. All that kind of stuff. I will be announcing very soon, maybe even today, access to the new day trading group starting soon so that you can sign up and lock your spot for that. And one of the things I'm going to do for those that sign up this week, so hopefully I can get this out, because if you sign up next week, even though it's the end of the day trading group, I will trade all of next week for all the people that re-up for another quarter. So look for that, So hopefully I can get that done. So again, if you renew your membership to the day trading group for another quarter, I'll throw in another week for free. Oh, and technically I've lowered the price by $100 too. Oh, and I'm adding a second daily meeting. So we're not meeting just once a day, but twice a day. Wait, I'm doubling the service, cutting the price, and throwing in an extra week? You're welcome. See you tomorrow.